Good morning and welcome. You're watching the Small and Mid Cap Show here on NDTV Profit. Thanks for tuning in. And we, Harsh, myself, as well as Mahima, we're coming to you live from the Go India Advisors Promoters Conference happening here at the St. Regis in Mumbai. And we will be talking to plenty of guests. The first of many is going to be Mr. Rishi Gupta of Fino Payments Bank, promoter and managing director there. Welcome so much, sir. It's a pleasure chatting with you.
Yeah, absolutely.
Sir, first off, just with regard to where you are in your journey towards growth, both on touch points as well as on customers. You're on 1.1 crore customers, you're on 18 lakh touch points currently. Talk to us about maybe the next 2 to 3 year journey of where the company is going in terms of these two metrics.
Okay, good. And welcome to all the NDTV Profit viewers. See, when we started Fino Payments Bank 7 years back, the first lever which we were building was on transaction platforms, and we built up a huge transaction ecosystem, encountering millions of customers who come to our touch points. We have 18 lakh merchant points. So that was the first business which we started. The first wheel, as I would say, in the car was the transaction business. Then we built up the entire CASA liability business, and CASA liability customers are near 1.1 crore plus now. And CASA also gives us not only the fact that it gives us the income from new customers and existing customers, but also liability income and transaction income. So that is the second wheel. The third wheel was the cash management services. Now we have more than 200 customers whom we provide CMS service, roughly about 6,500 crores plus we do every month now. And those are customers in various segments, in NBFC, MFI, e-commerce, logistics. And the fourth wheel which we started, you would recall, started a Fino 2.0 journey 2 years back, which was the digital journey, as our customer was also moving from physical to digital, and also the UPI ecosystem was also growing. The digital journey of Fino has become the fourth wheel, and we see growth coming in all the four wheels of the company, whether it's transaction, whether it's your CASA, CMS, and now digital. So Fino is truly moving from a physical company to a digital company, and we are truly a digital company now. And I would give a lot of credit to our customers who have actually picked up the digital journey far more than what we had expected. In fact, the growth and the outcomes on digital is far better than what we had planned also.
So where do the touch points as well as the customers go from here? Maybe in the next 2 to 3 years. Are you still doubling in size every 2 to 3 years in terms of touch points and customers?
So we add about 2.5 lakh merchant points every year. So our journey on that will continue to be in that phase. Obviously, as we have grown into now, the number of additions also will slow down a bit, but 2.5 lakh you can take it will be added every year. On our customer ecosystem, we add about 30 to 35 lakh customers every year, and we expect that the same number of 7.5 to 8 lakh new customers will also get added. But what is more heartening to see is the fact that a lot of these customers are now getting into digital ecosystem. Roughly 35 to 40% of our customers are now into the UPI platform, and roughly we do about 1.3% of the overall UPI transactions of the country in Fino ecosystem now.
Right. So, Mr. Gupta, I want to understand in terms of your renewal of revenue, what has the trajectory been like, and going forward, from a long-term perspective, what kind of trajectory are you expecting?
So that is one of our big sources of income from our CASA customer ownership product which we have. So in 23 we had about 75 or 76 crores of renewal income. In 24 we had about 125 crores of renewal income, which is roughly 50 crores more than 23. We expect that the same trajectory will continue in 24, 25 onwards also. In fact, with more and more customers becoming digital, and the ecosystem is becoming more live. With more live customers, more balances and more renewals, we expect that it should grow over a period of time.
Got it. Your growth was roughly 56 to 60% with regard to this renewal income.
Yes.
By the same trajectory, you mean 50 CR every year? Or do you mean a 50 to 60% kind of growth rate every year?
So at least for 24-25, we expect that the growth rate should be between 50 to 55% or so.
Got it. So that's very strong growth coming in.
Yes.
And therefore, at a steady state, what should the mix be like for renewal versus other income? At least maybe over the next 2 years, if you can give us some kind of thought. So this will go to maybe 10% or so of your overall revenue mix?
So of the overall revenue mix in FY24, it was about 8% or so. We expect that number should cross about 10 to 12% as we move forward in this, maybe 10% in this year, and maybe as we move forward a higher number. But the bigger growth is coming on the digital ecosystem. Digital ecosystem, which is about 6% in FY24, is expected to triple in 24-25. So we are expecting a higher growth. We have been growing consistently at 20% plus for the last couple of years. Initial years were even a higher growth. We expect that the growth in 25 will be higher than 20%, somewhere in the region of about 25% or so.
Okay. Mr. Gupta, my next question is something that the viewers are actually very interested in. We want to understand as to, your license with respect to the small finance bank.
Yeah.
What is the progress there? How are you planning the entire shift from a payments bank to a small finance bank?
So, as per the RBI guidelines, any payments bank, non-corporate payments bank, post 5 years, can apply for a small finance bank. In line of that, we applied to RBI in December of 23. So it's been 6 months of our application. Parallelly, what we are also doing is we are also working internally. So we have tied up with multiple NBFCs now with regard to providing them referral product on the asset side. So that becomes a process of learning for us also. So that is the first journey which is there. On technology, but we are investing a lot on technology. In the last couple of years, we have invested quite a bit in building up the infra and the security and systems. In this year, we are investing a lot in building up the digital part of the technology, so to say. We are also moving away from outsource core banking to an in-house finical core banking platform. So a lot of ecosystem we are building on the technology. So when we look at building up a platform for asset product, you need to understand the technology. So that piece we are trying to build up as we go. And we are also trying to partner with some of the NBFCs. The strategy for our SFB is on the DDD strategy, which we have already spoken in the past, which is distribution, data, and digital. So distribution, already 18 lakh merchants we have. We expect that number to grow in the next couple of years. Data of those 18 lakh merchants plus 1 crore plus customers, that number of customers will also be adding 30 to 35 lakhs every year. So that becomes the core business where data will be used for analysis and for giving out products. And the third is a digital journey. With digital becoming our focus area, I think that will help us in terms of growth on the asset product whenever we get the approval from the Reserve Bank on that.
Right. And so just talk to us about the strategy behind the asset product. Is it first off going to be through third-party distribution channels and you're only going to focus on that part of your business and then slowly you will phase in, or you're all set to go and you'll unleash the power because you have that in terms of capital adequacy, 50% plus, and therefore you have that power to just go whole hog on all 18 lakh touch points and start lending? So what's the thought there?
So we have always been very steady, and our movement has always been very careful and cautious. And when you get into asset, you need to be even more careful and cautious rather than just jumping into it. Fino as a company on our payments transaction as well as now digital and CASA, we are already a profitable company. So there is no real pressure for us that we need to turn around the model so that we become profitable. So we are already achieved that profit numbers, so to say, and the numbers will grow in the years to come also. So that piece what we want to do is we want to understand the customer profile, understand the merchant profile, partner with a couple of NBFCs, as I said, understand what is the requirements of the customer, what is the requirements of the merchant. What we understand is that there is a huge demand. So whenever I go to the field, I meet a lot of customers, I meet a lot of merchants. I think asset is something which everybody wants. Unfortunately, till now, because of the license, we don't have that. But with our application going now, hopefully we'll get the license. And in that process, we'll be able to offer asset product of our own on our own balance sheet. So whenever it happens, we will be able to provide small working capital loans to merchants, small ticket loans to customers to start with. And then as they grow, we'll offer more into secured lending, housing, affordable housing. A two-wheeler is a big demand in rural segment. A gold loan is again a big demand. So we'll go slowly and steadily. And when we put our model also, we have also looked at the credit deposit ratio. And we are also conscious of the fact that the SFB has to be a liability first bank.
Yes.
So we already have a good ecosystem. We have been able to generate liabilities, more than 1,800 crores of liabilities we have right now. So that liability will become the base, and it is only going to grow. The liability is expected to grow as we move into the asset product also in the future.
Right. So, then going forward, like what will be the utilization of funds be like, where will your OPEX go at, let's say from a long-term perspective, once you adopt this, the small finance bank license?
Now, that's a very, very important and very interesting question also, because the moment people think of asset, it looks like it's a very fixed cost heavy, a very OPEX heavy kind of a model. See, in payments bank also we have built up a very low fixed cost and a low OPEX model. What we don't want to do when we convert into an SFB, whenever that happens, is to change our DNA. Our DNA has been building up business with low OPEX and low CAPEX. We will continue to follow that same philosophy, which means that we will continue to focus on building up the ecosystem around the merchant network which we have. So now we are present in almost 95-96% of the districts in the country. So that's a huge distribution we have. What we will do is we'll put up small set of controlling offices, so to say, and maybe set up some people who will add to the man force in terms of the asset product per se. But our OPEX, we don't expect that we will set up huge branch network and a huge network of people to build up a very high OPEX and a very high network of people to manage the asset product.
That's honestly very unique and very interesting to understand some of these metrics. Now, just in terms of profitability, given our limitation on time as well, just in terms of profitability, where should we go? So we're currently at roughly 85 crore of profit, around 1500 crore on top line. Firstly, will this ratio go up, likely to go up, because that's what you've always guided for? So the PAT margin likely to go up, but where should the bottom line number start to go? That's my first question, and I'll add a little more to that.
So on the when we look at the projection, so to say, we expect at least more than 20%, as I said, around 25% growth we should look at in FY25. Normally our profit has been higher because of the operating leverage which we get. With the 25% revenue growth, you can expect a higher growth in terms of the profit as such. Very difficult for me to actually tell you in terms of what will be the real number of profit growth, but you can say it will be definitely higher than 25% in 25 if the revenue grows more than 25% or so.
Understood. And my last question, is to try and break down as to the journey of the loans or your distribution on the asset side. If the SFB license were to come, say, tomorrow, so what would the journey therefore be? How quickly will you start distributing loans? And what will the impact of that be on your top line, on your bottom line? Apologies.
So the impact on the bottom line will be more than the real impact on the top line, because right now, because of the model which we are following, 100% of our liabilities we are investing in government securities and FDs of a bank. Having said that, we still are getting 4% plus margin on that. AAA name of 4% is a very good name.
Correct.
But with the low cost of fund and a reasonable pricing on our asset product, you can expect that 4% would probably double, or maybe may go 2.5 times once we start the asset product. Like I said earlier, we'll follow a very cautious approach. We will not really jump into it that now that we have a license or whenever we have a license that we'll start lending aggressively. We'll be very cautious. We'll start small and then scale it up, and we'll also be looking at building up an ecosystem around our merchants and our customers. See, when you have a merchant in a place, and that merchant is our customer also, but he also has a network of merchants around him. So that can also become a trigger point or a scale which can help us. So we will focus on building up the model right. That is the first priority for us. Scaling can happen over a period of time.
So the scaling will happen, say, after a year. Is that a reasonable amount of time to start?
I think it's too premature for me to tell anything on that. We'll have to first go, let the rubber hit the road, and then we'll come to know exactly what will happen.
Fair, sir.
Right. One last quick question, it's not related to the banking side, but, your expectations from this budget of, which is going to come out in July, what are your expectations?
I think what I understand is that the government is really going to push a lot more on the rural flow of money or improvements in terms of a lot of farmer improvements and everything else. So because Fino has large set of customers who are in rural, so any money into the hands of rural customers or government focus on various government guarantee schemes or employment guarantee schemes will definitely help our ecosystem. If you recall, after the government took, one of the first files which got cleared was the PM Kisan funding which was there. So definitely this kind of things helps us. In terms of the ecosystem, I think the digital public infrastructure which the government has set has become quite strong and big now. What we would like is that if some kind of sustainability model around it is also, while government is giving incentives through MITI and other incentives are coming, but the model itself, it can become sustainable. I think that will really make the model very long term.
Point taken. Well, Mr. Gupta, thank you so much for taking out time and giving us those wonderful insights and speaking with us at NDTV Profit. It was a pleasure talking to you.
Thank you very much, and I hope you have a nice day. Thank you.
You too, Mr. Gupta.